All right. Good morning, ladies and gentlemen. I hope you guys are good, and I hope you guys are making money. Making money. Hope the market is faring on well. Yeah, I'm not seeing my co-host. I hope he joins soon. Right. Let's see. Okay. Hmm. Bye. All right. I think we're good to start. Am I audible enough?
Yes.
Okay. All right. I think let's get on. Let's start and cruise through today's class. So picking up from where we stopped yesterday, we're going to begin our real technical analysis, and our basis for today's class would be one of the supporting tool used in technical analysis, which is trend lines. And so we're going to see what a trend line is and why we need to master the art of capturing market movements or using the trend lines. And at the same time, we're going to see how best we can draw a perfect trend line to monitor through the market and give us a perspective of what the future price movement will be like. So you're going to allow me share my screen and then we continue. Okay. Okay. All right. So I hope my screen is visible now.
Yes.
Is it visible now? Okay. So basically what is a trend line? In simple term, a trend line is a straight line, most of the time drawn over a pivot high or under a pivot low, and then extended to the future so that it helps show price action and then the prevailing direction of the price. In simple terms, it's basically a visual representation of what we commonly know as support and resistance in any time frame. Okay, so that is what a trend line is. So in most cases, we are used so much to the term support and resistance, but it means the same thing when you talk about trend line. So it is majorly intended to capture market movement basing on the previous performance, right? Previous market price movement, so that you're able to predict the future. Now, why is it very important for you to learn how to properly draw this trend line? Number one is that it helps you uh, uh, actually monitor and analyze our price action fares on approaching this trend line. Remember, we are trying to predict a future price movement. So we have to base on what has already been captured or the footprint of what has been established. And then we try to have a picture of what the future or what the most likely future price movement will be like. So if you can draw that, if you can capture that movement very correctly based on the previous performance, then it will be easier for you to monitor and then analyze how this market price will be faring once they approach these lines that you have drawn. Okay? Now, the importance of that is that as a trader, if you can capture that correctly, it will easily help you predict and identify what we call the possible price reversal areas. So it quickly helps you do that. It will help you easily identify the possible price reversal area. And by so doing, it will help you make the right decisions as to when to enter and exit from the market. Because remember, you would have already outlined or drawn your price reaction level, which are the trend lines, the support and the resistance. Okay? Now, these trend lines can be drawn to capture the three different market structures. It's important. You can draw them to capture the three market structures. And just a quick one, we all know that we have three market structures or types of movement. We have, of course, the obvious one, which is the sideways. We have the uptrend, and then the down trend. Now you can draw your trend line to capture any of these three market structures, of which there are a little bit of principles that you follow depending on the kind of market you wish to draw your trend lines on. The most common one that we like drawing our trend lines on or capture its movement is actually the sideways, because we tend to draw it mostly horizontally. We tend to draw our trend line, or what we call support and resistance, majorly horizontally. Okay? Occasionally, do we draw it on a rising trend or a dropping trend? Okay? So we tend to draw so much more on the sideways market, and it is what we're used to. But we're going to see how you can draw this trend line on any of those, because you're tracking the movement of the price through any of those market structures. And in so doing, you are at the same time looking for opportunities to make entries and then also exit. So by drawing this, it will give you a clear picture of the direction towards which the market will be taking. It gives you the possible picture of what you're supposed to expect if all falls out in your favor. Even when it doesn't fall out in your favor, at least you have some picture, a clue of what is most likely going to happen, right? So that is, those are the three market structures upon which we can draw our trend line. Now, let's begin with the sideways trend line. The sideways market structure. Now, you can draw your trend line in a sideways market structure in this manner. Let's assume, I'm going to give an example, just a demonstrative one. In a sideways market structure, we tend to have this kind of movement. The market price rises and then dips slightly, possibly it may even rise to that level, then comes back here, okay, maybe to this point, then rises again, okay, maybe then it comes here, and then something like that. So I'm going to give this as an example. So in a sideways market, there is no clear direction of the market with regards to an uptrend or a downtrend, you find that the market price is consolidating within a specific price range. It's trading within a specific price range. It rises, but it doesn't go past a particular price level. It drops, but does not drop below a specific price level, but rather it will just be moving from in form of a zigzag, it will be trading within the range, okay? Yeah, so I'm going to assume that this is our sideways market structure where we have this specific price range and then the lower price range. Now, the upper price range is what we'll refer to as a resistance. And then the lower price range is what we'll refer to as a support. Right? Yes. So any area that resists price action, that prevents the price from rising, becomes a resistance. Any price level that prevents the market price from continuing to drop, it's called a support. Remember, prices react to these specific price levels over time. Now, because we know that those are the specific price reaction levels, most of the times our intention is to find out how will the price in the future react to this specific price level upon approaching them. Yeah? So that's why you draw this line and extend it to the future, because you're not after what has already happened, but you are after what is most likely going to happen in the future. Okay? So you draw this line very well, and then you relax and see how price fares. There are moments or there are points where you will make decisions to enter, and there are those moments where you will make decisions to exit, depending on what you would find out later on as the price is reacting to those levels. You understand? Yeah, so that is very important. It's very, very important. Now, how do we draw this line? How do we perfectly draw this support and resistance on the chart? The simplest step to do is, one, first of all, locate your market price. When you open your chart, locate where your market price is of that particular asset. Okay? So the first step is to locate. You need to locate. Sorry. Oh. So you need to, first of all, locate the price. These are the simple steps that I'm going to use. You may not follow them necessarily, as long as you have it in the back of your mind. That's okay. First, you locate the price, the market price. You locate it from the chart. When you open your chart, of course, you definitely use, this is the price. This is the price lane. This is where you see the price of the asset. So first of all, you will see a line dotted from the candle going towards the price lane. So that point becomes your current market price, right? Right, yes. Then, two, from the market price, for you to draw your first resistance. So the second point is for you to draw your first resistance. Remember, you're looking at any price reaction level that is above the market price. That becomes your resistance, yeah? So if you have your market price here, for you to draw your first resistance line, you need to locate the most recent swing high, or the highest point the price ever reached in the recent time with regards or with reference to the market price, right? How high the market price rose in the most recent time before getting to your current price. How far did the market price rise? So that point is I normally tend to brand it as an inverted V. You need to look out for that peak of an inverted V, right? In the build-up to your market price, how far the market price went. So that point of a price reversal to the downside to get to your current market price becomes your first resistance, okay? So, and you can simply do that by making reference to your market price, going up slightly, and then tracking back in history. That point you're going to have your first inverted V becomes the point where you're going to mark and draw your first resistance, right? Like, for example, if I come here, I'm going to assume that, let me just bring this a little bit nearer here. So I'm going to assume that this is how the market price is faring before I go to the chart. That is how the market price is faring. So definitely what I'm going to do, the first thing I'm going to do is to locate my market price. Just a minute, I'm looking for my writing tool. Yeah. I'm looking for the annotation. I'm not seeing it. I don't know why it disappeared. Writing tool, where are you? Yeah. Okay. The writing tool has disappeared from, okay, so I've got it. So this is the area. So one, you demarcate the area upon which your analysis is going to be based on. Two, locate the market price, the current market price, or the point at which the price is at the moment. Three, locate your first inverted V point, that peak, or what we'll refer simply as the most recent swing high, okay, in relation to this. That point where the market price had a inverted V turn, okay, or V shape to have a downward movement from an upward movement, then it had to make a U-turn to a downward movement. As long as it is the most recent with reference to your market price, that becomes the first resistance. So what I'm going to do with reference to this, I will definitely look at this point. Then to draw my first resistance, I look slightly up, and then I go back in history, and this will be my first peak, the most recent swing high that I'm going to encounter in the course of my tracking back, right? So this point becomes a key resistance price level, you know? So I'm going to pick my line and I draw there. So that's what I'm going to do simply. So I'll come here, go to your drawing tool, pick a horizontal ray, and then you capture there. You put it just there. Okay. See that? So that's how it will appear, right? That's how it will be. Okay. Then I'm going to do the same for my first support. My first support, I will simply still make reference to my market price. So that means I'll have to locate my market price. This time I'm not going to look up. I'm going to look down and I identify the most recent swing low, the lowest point of the price so far reached in the course of the most recent movement. Okay, the most recent swing low. So, which in this case, the first encounter would be this point. So I'll equally pick my line and I put it there. So with this, I already have, or I already know, the possible price reaction levels with regards to this build-up of what is happening here, okay? I already know. I know that as the price rises, it's most likely going to encounter a rejection there because it is a resistance level. Or should it happen to reverse to the downside, I am at least pretty sure to some extent that once it approaches this price level, it's going to encounter a support. All right, it's going to be supported. Now, but also put at the back of your mind that not every other time the price approaches this support and resistance and it actually rejects its movement past those levels. Sometimes the price may approach a resistance level and the reaction can be in two ways. One, it may reject it, which would definitely means a reversal to the downside, or it may actually break through. Okay, a breakout will occur. And once a breakout happens, it is a signal that the price is ready to rally up, right? The same thing happens when the price approaches a support. Two scenarios happen. Either it gets supported, in which case it reverses and begins having an upward movement, okay? Or it may as well break through, meaning a breakout will happen. And once a breakout happens, it's also a signal that the price is ready to rally to the downside, because the next movement will be in an attempt to come and retest it and then continue down. And same applies to the other side. So it will definitely, therefore, be very important for you to, upon drawing your first support and first resistance, go ahead and capture, go ahead and locate, and then draw also your second support and second resistance, such that if the first support is broken through, you know the next stopping point. If the first resistance is broken out, okay, then you know the possible stopping point as well. And that will help you establish, one, your margin call drop, and then this will help you establish your TP. Once a breakout happens, it helps you. And then once a breakout happens here, it is good for establishment of margin call drop. Are we still okay up to that point? If we are still okay up to that point, let me see one on the chart. Just drop a thumbs up, okay? All right. Yeah, I hope you're following. Is it quite hard? Is it difficult? Is it simpler? Okay, that's okay then. Okay, 50-50. Yeah, it can always not be 100% on first time, you know. It cannot always not be like sometimes some things is a build up. You keep on building up, and definitely you get there. Yeah. All right. So let me repeat it one more time. So I'm going to summarize it, and as I do the summary, I'll basically go on the chart. I'm just gonna use the chart basically. So before I go, let me re-establish this line. I'm gonna re-establish this line. I'm gonna capture a movement here just to paint a picture so that when we go to the chart, it really makes a lot of sense. Yeah, I want it to make a lot of sense for everyone so that yeah, we're good. We're good. And they can decide to make something similar like this, something like that. Then I've dropped to this point. Okay, drop to maybe this point, this, maybe there. Sorry. Go up to maybe that around there. Then I come here. Ayabas. Okay. Pardon me for the drawing. So I hope you get this. Anyway, let me just do this. Let me just hide this out. Okay. Let's use this like this. Okay. So this is what we're saying. This is really what we're saying. That when you're drawing for you, when you want to make a perfect analysis on the chart, when you open your chart, you need to follow this rule. Remember, when you open a chart, you have a big, you can like see several candles, like it's a big thing. It exposes almost an entire event that happened for some time, for a long time. But you're not going to base on what happened long ago. You have to, the best option, and normally the best strategy is to use what happened in the most recent time. In the most recent time. Yes, you're going to base on that to predict your future. You're not going to use what has happened so long ago. Though sometimes it helps you confirm, okay, whether the areas you've captured actually is the real area. So, but you're going to focus, okay? Just pick an area. So you open a chart like this, okay? And you have like a bigger picture on the chart. So the best thing you're going to do is just demarcate, get an area, just have your demarcation like this. You can capture something like that, okay? You can have an area like that, you capture it, that this is where I'm going to concentrate in my analysis, as simple as that. Let me just, okay, all right. So this is the area that you're going to focus on. Then two, you're going to locate your market price. So which, in this case, you come on the chart, look at where the market price is. So basing on that, you want to draw your first resistance. Simply look for the most recent swing high by moving upward and then tracking backwards. The first reversal point, the price reversal point, or what we call an inverted V, that becomes your most recent swing high because it is what you met in the course of the build-up of this movement. Yeah. So that becomes your first swing high. So because it is your first swing high, that becomes your first resistance. Okay. First resistance. So what you're going to do, you're going to pick a line, and then you just put it there. You draw it there. Just draw simply there, put it there. That becomes your first resistance. Then, still with reference to the market price, you're going to move down in history. You're going to move down, okay? And then backward slightly. That first encounter of a V shape becomes your most recent swing low. And because it is your most recent swing low, it definitely qualifies to be your first support because you're making reference to the market price. So you pick a line as well, and then you simply draw there. Okay? So you have your immediate point of price reactions with reference to your market price. So the market price is in the middle, okay, of two price reaction levels. The upper one, which is the resistance, and the lower one, which is your support. So in the event that this market price approaches any of them, there's going to be two reactions. Either if it is approaching an uptrend, I mean, if it is approaching a resistance, it will either come and encounter a rejection, in which case it's gonna reverse downwards, okay? Or it may actually come and then breaks above it, okay? Those are the two scenarios All right, sorry guys. We're back. There was some slight interruption, network. So, okay. 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 So let's come back. Let's come back, please. Let's come back. Mm. So I hope that point was very clear. So how you mark, you mark your support and how you mark your resistance. And I just want to go to the chart. Let me just go to the chart, and then based on what is happening in real time. So at the moment we have let me just see if I can use this 15 minutes time frame. Okay. Mm. Okay. So let's use this. Let's use this. Let's use this. So we have a very big chart. I mean, the chart is actually displaying a large data on how price has reacted in the past, and we're really not going to dive so much into what has passed. So I want us to pick our area that we're going to concentrate in, which is going to be just this. So our area of concentration would be here. We're going to concentrate here. Okay, this is an area that we're going to concentrate in. Right. So now the first thing we said was after, locating or demarcating your area, the second thing you have to do is locate your market price, which in this case is here. This is where the market price is. Okay, if you look at this candle, that is where the current market price is. Okay, that's the current market price. Let me see. That's a little. Okay, so this is where our market price is. I hope we can see this. This is where the market price is here. Currently it is trading at 0.14562. That is where the market price is. So we're going to make reference to the market price, okay, to identify our first swing high, where we're going to draw our first resistance. So I'm going to assume that is where my market price is. So I'm going to base on that to locate my first swing high by simply going up and then tracking back. And the first point of a reversal in the course of a previous movement of this nature, that becomes the most recent swing high. That is the first point I have encountered, right? Or you will encounter. It becomes your most recent swing high. So it is where you're going to draw your first resistance. So in this case, pick a line. It can be a horizontal line. It can be a horizontal ray. Then just place it on the high of that candle. Like that. Okay? You have placed it on the high of that red candle. So when you're using a line, make sure it is at the tip of the wick, the upper wick. Okay? Yeah, then still we're going to make reference to this current price. We're going to draw our first support. And the first support in this case becomes the first lowest point so far seen or that would have come across with reference to the market price. And in this case, to me, this, you see that this other lower part of the red candle, the lower wick, to me, I see that as being the most recent swing low. Because I saw how the market price built up in this kind of movement, then came back down, and now it is midway. Either it's gonna fill up this gap to make sure that it is really a uniform movement before going up, but it's still left, for us to see what happens. But to me, this becomes the most recent. Yeah, becomes the most recent. And we're going to see how and why. Okay, so this, I'll pick this, and I simply put it there. I'll put it there. That becomes my first support. Then for me to draw my second support, I'm going to base on the first support line. Okay, so I'm going to look at this point level, look down, and try to track back. Then at the second encounter of a V-shape point becomes my second support. Becomes support 2. So I'm going to pick this, and in this case, this becomes my second support. Okay, becomes the second support. Now, if I want to draw my second resistance, I'm going to make reference to this very first resistance, this one here. So I'll look up, track back. The first encounter I will have will become my resistance 2. Any encounter that was in the event of this kind of movement, a rising market and then a reversal, then a downward movement. So that peak of an inverted V becomes my second most recent swing high with reference to the second resistance. So you're going to go up, go back in history, any point you encounter that is above that upper line becomes your resistance. So let's see. Let's go and see. Hey, so high. Okay. So let's come here. And in this case, this would be it. From this point, I'll have this one here. I don't know whether you all see that. Do you see that? So it can be that. Okay. Can use that. So you have 2 resistance and 2 support levels. 2 support levels. Is that really hard? Is that hard? Is it hard? Is it hard? Is it difficult? The tool I use for capturing the area, it's called the rectangle. It's called the rectangle. This is called the rectangle. When you come to the drawing tool, here it is. Yes, a minute. Let me look for it. Okay, here it is. I use this for capturing the area. It's called a rectangle, but you can customize it because in the default setting, you can customize it. You can customize it. You can allow it also be used as a drawing. I mean, a drawing tool for support and resistance, especially when you're capturing an area of support and area of resistance. So you will just set it so that it can run from the right to the left. Or you can just untick, that provision for extending right and left, and then it just becomes like a rectangle. So it is you who extends it manually from a specific point you want to put it to where you want it to end. Yeah. So like let me tap on it. If it is like this, for example, and you put it there, you can, see, you can extend it and play around with it the way you want. Okay, like that. And on the same, you can as well try to extend it by just adjusting. You go to the settings, and then you tap on this very part. Is this part here? Just a minute. There is this part. Extend right, extend left. So when you tick it, you're going to see it will cease being a rectangle that you drew. It will now just run horizontally from this side to that side. And then you can reduce the size to suit what you want to use it for. Like if I take this and I go back, you see, I'll find when it is running, So I can adjust. I can adjust the size. You see? I can adjust it, and it can also be used as a trend line, or as a support, or as a resistance, depending on what you want to use it for. See that? Yeah, so that's the drawing tool. That's what I'm using for capturing those movements. Eh? But that part, I just wanted to make sure. Is it okay? Do you see how you draw that? Ah, I was thinking you missed the second support. That's a green candle before one you chose. Okay. 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 So yeah, let's do one more time. Let's do one more. We're just trying to see how to perfectly draw this. Let's pick another coin probably. Let me pick maybe let me pick this 8-5. 8-5 and try to draw together. Let's try to draw together. So we're going to draw our first support and first support, second support. First resistance, second resistance. So the first thing first. We capture area, right? Just capture the area. Oh, let's capture our area. Now you can necessarily not capture if you already have, you just focus, eh? But just for purpose of demonstration, I can say I'm going to concentrate on this area. Sorry, let me just make it a rectangle. And take this two, and then, yeah, I have that. So I'm going to extend this to this point. Okay, so that's the area that we're going to concentrate on. We don't want to span through all the entire chart. So that's just the area you're going to concentrate in. Then you're going to magnify it. So the second thing we're going to do is to locate our current price. So I believe it's here. It's here, since it's the red candle. That is where the current price is. So we want to draw our first resistance. So the first resistance is drawn by basing your movement, okay, making reference to the current price. Sorry, you have to make reference to the current price. So what you're going to do here is use the current price, move up, then try to track through backwards. The first swing high, the most recent swing high you're going to encounter, that becomes your first resistance. Okay? And in this case, I think this is it. This becomes the first resistance. So as you place the line, put it exactly at the tip of that candle, at the tip of the wick of that candle. In other words, you put it on the high of that candle, of the longest candle there. Okay? So you have drawn your first resistance. So when you want to draw your second, you want to draw your first or establish your first support, you quickly come back to the current price, move down, and then track backwards. The first swing low you get becomes your support. See that? So as you put it also, at the same time as you put the line to establish your first support, make sure that you identify that longest candle, okay? Okay, you put the line on the low of that longest candle. The lowest point is where is what you're capturing. So there can be multiple candles almost at the same level, but that one which has the longest low is where you place your line, right? Like in this case, you see we have these two candles that have almost the same length of the lower wick. The length of the lower wicks are almost the same. There's this red, and then there is the green. See that? But we have placed our line on the low of the green because it has the lowest low among the two. So that's what you do. So when you draw that, when you're done drawing that, you want to establish your second resistance and second support. So the second resistance is going to be established by basing our tracking of the previous movement or performance using the first resistance established. So from here, okay, from the resistance one, from R1, we're going to move up and slowly track back. This most recent swing high with reference to the first resistance becomes our resistance too. So let's do that. Quickly go back. And I think the first encounter is this. This is the first encounter. So I'm going to put the line on the high of that candle. And in this case, I think the green one has the highest high. Oh, so I'll put it there. And then I come down and try to locate my second support as well. So making reference to the first support, I'm going to track backward as well, move backward and see, and see, and see. In this case, it would be this, right? The major movement would be that, right? Now, after capturing your first support and first resistance, there are tendencies where we are most likely going to find what we literally call them mini, but they're not mini, but just for purposes of differentiation, we call them mini price reaction level, okay? Among the major movement, mini price reaction level. Now, the mini price reaction levels are those price reaction level in between what we have identified already. What would be between our first support and second support? What will be in between the first resistance and the second resistance? Or what would be actually between the market price and the first resistance? Okay, it can be between the market price and our first support, or it can be between first support and second support. It can be in between here. Same way, it can also be in between the market price and first resistance around here, or it can also be in between R1 and R2. Those are what we call mini price reaction level. It is equally important for us to capture them. And how best to capture them? We may not capture them immediately as we are doing the drawing, okay? As we're identifying our first R, second R, first S, second S. But we can capture them later after establishing the two by simply looking in between. But this will only come out clearly when we look at the historical information. Yeah? Those points where we saw there is a reaction, price, reversing, and, something like that. Those reversal points. Like in this case, if we check here critically, we can together agree that this seems to be a price reaction level, right? Let me just change this. This seems to be a price reaction level. This equally seems to be a price reaction level, right? This seems to be a price reaction level, but it is in between R1 and S1 together. So it's more literally like silent. Well, that's why we call it mini. It's more literally like silent, but it can play a big role in terms of price movement. It can play a big role, right? Here we're looking at the broader movement, but there are those mini ones that can as well affect the move or influence the movement of the price. Okay, so those points also we need to identify them and look and try to draw them, right? We can capture them. So, like in this case, the most important ones would be the one which are in between the market price and first resistance and first support. The one which is in between here. In between here. Okay? The one which is in between here, which you can identify in between. It is very important. So let's do that. So I'm going to pick this. And I'm going to pick, and I think this could be one of them. This could be one of them. This maybe. That, but I'm going to change the color just to make sure it's slightly different from the rest. Okay. It can be one, which is very true, because if you try to track back in history, you'll realize that at this point, the price reacted to this very line. At this point, the price reacted to the very line, much as the wick tried to move above. But if you follow through this movement in the price here, then it went up, okay? Then it slightly came down, reacted, then went down before actually moving. It becomes something, it becomes something. Then also, if you monitor through this movement, the price reacted before going up to the very same level. Now, as you go further backward, you'll also appreciate that if you look at this point, when you track through this movement, the price broke through this first support and then encountered a resistance here. It had to first of all retrace before building momentum to break it. See that? So it makes us have some level of certainty that this is a key price reaction level as well. But we wouldn't have seen it. Okay, we are not really considering it because we are focused so much in identifying our first support and first resistance, basing on the market price, what is happening in real time. But now, when you track back in history and we identify this mini price reaction level, it makes a lot of sense. It guides you so much. So to me, that becomes the major, right? Yeah, to me, that becomes a major one. That becomes a major. Yeah, that becomes a major reaction, price reaction. Maybe let's see if this can be a second, but that is the major one. To me, that becomes a major price reaction level, which is in between resistance 1 and resistance 2. And support 2, sorry. Support 1, sorry, and resistance 1. It's a mini. So meaning making entry decisions will entirely depend on the market's reaction on this mini price reaction. Like in this case, if you see, we are looking at the possibility of the price, of the price moving past it as it heads towards S1. So as a trader, what you would do, you can either decide to make entry from in the current price and then measure that distance from current price to this first support. Whatever percentage you get becomes your margin call drop for the first call. Does that make sense? We are now entering deep, right? Is that okay? So much question, yeah? And we're about to conclude for today. we're about to, yeah, Sujata. Sujata, nice to see you again after some time. Yeah, that's good. Yeah. All right. So what I was saying is, when you establish this, when you capture this mini movement, yeah, in between resistance 1 and resistance 2, which you do not actually capture while focusing on the major resistance 1 and 2, when you do it later on by tracking through how the price performed previously, it helps you and guides you a lot, because the essence of drawing support 1, like somebody's asking, the essence of drawing support 1 and resistance 1 is to give you an area of focus. Then the essence of doing this, of capturing or identifying this mini resistance, actually also helps you so much when it comes to establishing margin calls and also making decisions of entry. And I said there are two instances here. You can either enter at market price, then use this price reaction level, which is just close to the market price, measure that distance to the first support that you have established. And let's do that. We are now assuming we are entering at market price because we don't want to miss out on any movement, right? We can say that it is going to come down to support 1 and then it fails, right? So we can establish this. This is a distance of 2.9, right? So there's a likelihood that it may drop down, or it may drop midway, or it may not drop at all. It may just build momentum from within this area of price reaction and then just goes up. So because you don't want to miss on this movement in case it moves up, you can decide to enter at current price, measure that distance to the first support, because at least you know that is your possible price reaction level. If the price goes down, at least you're sure. So allow the robot buy at this level in case it drops. But allow, first of all, the robot buy here because you're entering the market, then allow the robot buy at that level. So if it so happens that after the market price dropping to this support 1 and the robot buys, then there's a reversal to the upside, you're good to go. You begin enjoying profit earlier, okay? So this becomes the margin call drop for the first call, okay? Then you measure this distance from here all the way to resistance 1. The percentage you get becomes your TP. Does that make sense now? Does it make sense? Is it a total call drop or a fast call drop? It is fast. You can choose how you want to make it. You can make it a fast. You can decide to make it the second, or you can decide if the percentage is big, like 2 plus, you can decide to divide it into two and establish two margin calls. Yeah. So that, or 1 point something, 1 point something, so that at least you maximize. Okay. Yeah. Okay, ladies and gentlemen, I hope that is very clear. I hope this is absolutely very clear. Now, why we establish now, if we have made entry into the market already, just that sometimes we really don't have the time. But if you already made entry into the market and you've established your margin call drop, just a minute. Let's assume the market price, the robot buys off at this price level, right? If it drops to this level and the robot buys it off, do you know that if the market continues down, sometimes we may not know how much to set as our margin call drop. But you have this distance already. You have this distance already from your support 1 to support 2. But at the same time also, you need to see if at all there is any mini price reaction in between here as well, just like we did here. So it will require you moving back to identify if at all there is one before you make measurements. So you can go simply back, and then I think the first one that you will come across is this. This, right? That becomes one, right? The second one can be this. And the third one can be this. Yeah. Hey. We have this. Sorry. We have, here's my drawing tool. Okay. We have this. First. We have second. We have third. 3 mini price reaction level between support 1 and support 2. This becomes very critical in establishing margin call drops. You will establish your margin call drop intentionally, not basing on assumption. You're gonna know exactly how to establish this margin call drops. So you measure from support 1 to support 2. Okay, that is 2.3%. Then you have from 2, from that point to this point, that is another 1.95%. You have from there to this, that is 3.2. And then finally you have from that point to that, that is 2.7. You have a total of about from here to this point to support 2, that is about 10 point something percent drop. 10% drop. So as the market price dips to about -10, you have the bot taking action, buying at different price reaction level, basing on the percentage of set, which we found out by measuring or identifying or locating those different price reaction levels. So once it drops to a specific price level, the robot buys. If it continues further by that specific percentage, the next price reaction level, the robot buys again. So it continues buying down the dip as the market price dips to 10%. All right? So it is an intentional setting. It's not based on assumption, right? But if it doesn't really drop to all the 10%, sometimes it may not really drop to 10% completely, okay? It may drop to end of this and then it reverses. It can drop to this, it may come here, and then the robot buys, first call, right? Then it drops maybe here. The robot buys the second, then maybe here third. Then eventually it just reverses and goes up. It is okay. Or it may even drop all the way to this before it reverses and goes up. Or sometime on a serious dump market condition, it can drop up to this, that 10%, and then begins going up. But in the midst of it dropping, the robot is buying, accumulating more position. So that as eventually the market price begin rising, you have so much position to take profit from. Right? Yeah, so as simple as that. Okay. I think we are done for today. I hope it's done. For future trading, yeah, you can apply them. You can apply them, though for future trading, I tend to, I have a different approach that I tend to share with, that I do my mentorship on. My best one to do my mentorship program. It's a different approach. It's a different approach because there are two things that are very important and key. The aspect of liquidation makes it very, 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 very serious for you to escape. So that match that there's a lot of correlation between the margin call, the multiple buying ratios you're going to establish, and then the margin call drops, because your goal is pushing the liquidation price away from whatever market price the robot is executing a buy order. That is the goal. In the sports market, the goal is reducing the gap between an average price and a current market price, because you're looking at an earlier exit. There you're escaping liquidation. Here you wait. You don't want to stay longer in the market. So it's an approach of its own, and but similar, more or less similar. But then there's a specific approach on that. Yeah. I think that's basically all. If there is any question, I'll be happy to see if I can answer. Or yeah. So I think with this we are good to go. Basically tomorrow we shall see how we establish, how we can track through a rising trend. A rising market structure, basing on the support and resistance, and how you can, establish the margin call drop in a rising trend when you've drawn this trend line to monitor through that market. And same applies to a downtrend, how you can really buy the different level as you monitor through a downtrend, and then you see what happens later. But remember, the real goal, the goal is you are aiming at about 4 to 5 things when you're drawing this trend line. One is to monitor the progression of the trend. Okay? Right? 2, you are identifying a trend reversal possibility. Okay? 4, you are actually identifying, 3, you are identifying a trade entry opportunity. A reversal possibility towards any direction, either to the downside or upside, depending on the market structure you're tracking through. And it will also help you identify trade entry opportunities, because they normally happen within the reversal area. Okay? And then lastly, an exit opportunity, or how much to take from the market, depending on the irrespective of the market you're trading in. Okay? So it's a whole thing. That should be the goal as you do this analysis. And when you do this analysis, sometimes you don't do, like I said yesterday, you don't have to draw these lines because you want to enter. If you're not comfortable in entering at current market price, draw these lines, relax, come check later on, see where the market price has dropped so far, or where it is so far. If it is within your area of support, that is when you make entry. Okay, I didn't show you, but I'll share with you tomorrow the 2 possible entry points in the market. I'll share with you tomorrow. I hope I don't forget. So I think with all that, I will beg to end here. And thank you all for attending. And yeah, let's see how we move, how we can summarize tomorrow. I hope the time I get enough time to do that tomorrow, so that we're good. We're good to go. I think it will be a very good 3 days of planning. Yeah. Have a blessed day. Over to you, host. Oh, oh, I'm even the host now. Okay. I think I'm gonna end this, unless otherwise. I'm gonna end this for today. Happy to have everyone. Bibo, I think it's a while, quite a while. Coach Mo, it is quite a while. Hope you guys are good. It has been quite a while. Hope you're making money. Hope you're making money. Eh? Yeah, you're making money. All right. So have a blessed day. Have a blessed day, you guys. See you tomorrow. Bye bye.